Our next guest says there will be no recession and no Fed easing in the fourth quarter. Bill Spiropoulos is president and CEO of CoreStates Capital Advisors. His message to investors is to be cautious and overweight large cap multinational stocks. Let's bring him in. Good morning, Bill.
Good morning, Carol. How are you?
I'm doing pretty well, and stocks doing well. They gained for the first time in 3 days on Friday. You had the S&P marking its fifth straight weekly advance. Do you think the rally will continue through the end of the year?
Well, I think there's a question as to how far and how high it goes, and part of the issues, I think, are energy and oil, the dollar. So we call the 80-80 alert. If we can see the dollar index move back above 80, and we could see the cost of crude get below 80, I think you could see a powerful fourth quarter.
All right. How likely is that with oil? And I bring that up, Bill, because we're hitting another record this morning, going above 85. I mean, how likely is it, this 80-80 theory, that oil dips lower? Because a lot of folks think it's just going to go higher from here.
Well, I said a long time ago that under the worst conditions, oil could go over $100. But I think that right now oil's probably fairly extended, and that it won't take much to see some profit takers come in here and maybe some of the hedge funds getting short.
That's interesting. If that happens, I mean, would you be taking some money off the table when it comes to a lot of the energy names, which, as you know, have had great runs?
Yeah, it's been unbelievable. I've been tempted several times to lighten up a little bit, but it's like Mr. Pig doesn't want to leave this party, but I think it's getting late in the game.
All right, so maybe we're getting close to lightening up those positions. Let's talk about earnings. We had Mattel this morning. You know, they're starting to come out. We had GE on Friday. You know the estimates. S&P 500 companies expected to report the first decline in earnings since 2002. That's according to analyst estimates. The number is for a loss of about 0.6%. Do you think the number's too low, or are we being too pessimistic here?
I think we're too pessimistic. I think that there's a lot of things that can go wrong, but there's also a lot of things that could surprise to the upside. You know, you get some good luck here, and like I said, the oil and some of the pressure points removed, the dollar. I mean, with the dollar where it is, if it goes nowhere else but goes sideways, you're going to see a lot of these multinational companies make money they haven't made in a long time.
Right.
And that is probably the big story of 08.
Well, okay, so, you know, you talk about these multinationals. I'm guessing that's why you like, what, Procter & Gamble. The stock's, what, up about 11.5% so far this year. It hit a 52-week high on Friday. You like it because of the international exposure, and are you a little concerned it's getting a bit overvalued here?
No, I think that the earnings growth in PG and several of its companies in the same category are going to do absolutely bonkers over the next 4, 6, 8 quarters. And the fundamentals are not terrible. I mean, you look at this sector compared to others globally, I'd rather be here. And I'd also think hardy about looking at some of the other categories. One of our favorite plays is the Ivy Asset Strategy Fund. And the reason is I think that a lot of investors are overweight in the traditional stocks, bonds, cash, real estate type of financial engine.
Right.
And going forward, I think we really have to have currencies, raw materials, energy complex, the things that most folks don't have. The endowments do, but the retail investor does not. And Ivy gives you that opportunity to wait in the other categories, and they've got tremendous records, and I think that with globalization, that story doesn't go away.
Right. Let me point out to our viewers, over the past 5 years, that fund has returned almost 20% on average each year, putting it in the 98th percentile. So as you mentioned, it's got a great track record.
Another thing that's very important, Carol, is that the correlation rate between that and the Dow Jones and the S&P is very minimal. A lot of people think today that good diversification is having money in Chinese stocks and overseas, but these equities are highly correlated these days, 82%.
Okay, we're gonna have to leave it there, and that was a good point, though. I'm glad you got that in.